All right, trade pros, good morning. Welcome to morning market update for this beautiful Thursday, November 21st, 2019. It's George Papsov, Trade Pro Academy. Hope you guys are having a fantastic day. We're doing it from this angle again today because it's more convenient for this webinar. I got a lot of stuff that I clipped. It's been one heck of a ride the last 19 hours or so for the stock market. Good morning, Will and Mike. Good morning, everybody on YouTube. It's been one heck of a rocky ride for the stock market. All right, there's been volatility. We went down, we went up, we've gapped down, we went back up, and so there's a lot to talk about. So let me do it like this. Today I'm going to give you a timeline of the last 19 hours. All right, yesterday around 12 p.m. we were chugging along, consolidating around the morning open. We didn't really have too much action. All right, and I'll show you a chart in a second as well. We didn't have too much action. We're just sitting sideways around 31.14 on the open. And then at 12:52 p.m. came out the news that phase one deal with China and U.S. may not be completed this year, according to a Reuters report. All right, saying that trade experts and people close to the White House were the source for this news. Said Trump and U.S. Representative Robert Lighthizer recognized that rolling back tariffs for a deal fails to address the core intellectual property and technology transfer issues, will not be a good deal for the U.S. And the person that was briefed said, you know what, they're thinking about not getting this deal done. There's not enough time this year. That's counterintuitive to what we've been told. That's everything opposite to what the market's priced in. So the market dumped from 31.14 and went all the way down to 30.90, 3/4. This is quite a big sell-off. All right. Then at 2 p.m., we had, after we rebounded a little bit off the losses, we paired some of them back for this news. 2 p.m., we had the FOMC meeting minutes from 30th of October meeting. And these are the notes that came out. Most voters saw rates as appropriate unless there's a material change, all right, in the economy, including Lyle Brainerd, who is notoriously a dove, who herself said, you know what, rates are good where they're at. So Federal Reserve confirmed there are no more rate cuts. This mid-cycle adjustment is now complete. All right, so the market didn't really like that, but didn't really hate it either. And the fact that this trade war news came out and already unsettled it, made it drop from the 14 down to the 90, which is about a 24-point drop. Any bearishness in the Fed was already sort of built into it. All right, here's some interesting stuff the Fed said in addition to that. They said that they're considering long-term liquidity plans, like a standing repo. Remember how they're doing these overnight repos? They're considering making that a long-term tool to provide liquidity to the bank. So get this. It really incentivizes banks to blend more, to take more risky practices, because they know they have an overnight repo waiting for them if they could just pledge their bonds. So it's taking their bond portfolio and turning it as collateral for cash so they could lend out the cash, and they could just lend their bond portfolios in overnight to the Fed to reserve liquidity. So they're talking about adding continuous measures of liquidity. This is not good for the economy. There's something going on. I have a suspicion, we won't know until 2 years from now who exactly it is. I have a suspicion that one of the big banks in the United States was on the brink of collapse due to liquidity shortage. All right, I don't know which one it is. Nobody will know in 2 years' time from the first repo. We'll know because the Fed released that info. All right, Fed officials are divided on the future of inflation. They did not see negative rates as a useful tool in the U.S., so they dismissed it. So it was a somewhat hawkish announcement, meaning that they're expecting a little bit tighter policy from here, or at the very least, sideways policy. Market already built that expectation in. That was 2 p.m. All right, and then we go through the day. It makes a little bit of a rally upwards, gives or gains back some of the losses, most of the losses for the day from the Trump news, and then it closed at 3109.75. All right. And then at 5:08 p.m., while the market's closed, and now you wonder, why do you need to have higher margin liquidity for just 1 hour? Because in futures trading, $400 is your day trading margin at most brokerages, and it's $5,000 for overnight for 1 hour. And then back at 6 p.m. when it reopens after an hour closure, the margin requirements drop back down to day trade margin at $400. So why do you need 10 times as much capital to hold a position for 1 hour? Here's why. 5:08, U.S. House voted to pass a Hong Kong bill. All right, as it expected, and it's sending it to Donald Trump for signature. All right, and then shortly after, they say that Donald Trump is gonna sign it. All right, he said that he has all intention to sign this bill. This sort of angers China that the U.S. is getting involved with Hong Kong, and puts even more speculation if this deal is going to get done or not on the trade front. And then we open up on the ES 10 points lower. For every one contract you held, that's $500 negative without a chance to have a stop loss. So if you were long at 0975 into the close, and you put your stop loss at 8 even, saying I'm only going to take 4 ticks of heat, guess what? You lost $500 a lot because your stop got triggered at the opening price down below at 97. So the ES drops by 10 points. Now here we are again back to day session lows. I'll show you how this looks like on the chart. 206 this morning. China's Commerce Ministry says they'll strive to reach a phase 1 deal with the U.S. regarding possible disagreements in discussion. Rumors are not accurate, they say. Teams will maintain communication. All right. And then we learn at 5 a.m. this morning that China invited the United States last week, trade negotiators, for further talks. The U.S. declined to go because it said it's too far. And they feel that if they're going to go all the way there, they need to have some concession on IP protection, forced technology transfers, and higher ag purchase, like agriculture. So the reaction of that was the S&P rose 4 points over the course of about 3 minutes, then continued some of that upside. And now here we are sitting at today's price, which is more or less at the open of yesterday. All right. All this back and forth, all this volatility, and all we've done really is we're sitting at the same level as yesterday. There's been quite a freaking roller coaster ride. Let me show you how that looks. I got to unclip this camera. I can't screen share with you. I'm sorry, because this is just a camera update, but there's also Mark. Mark. He caught himself. There's Victorio. And if we just go a little bit higher. There's Azalea. All right. Here's me close up. All right, but back to the chart. Sometimes I get impatient and I have ADD, borderline. So here's the chart. So you might not see it properly. Here's where we were. All right. Big dump. This is off of the initial news report. All right. Then we come back, claw up to the VWAP, very much so an expected level. I had a short here. And then as we go into the close, this is where we close at the 9.75, and then we open back up near the 98. All right. So this whole thing is a gap. So if you had your stop here, it doesn't matter. You're stopped out down here because there's no contracts trading there. There's no liquidity. And then here's the overnight kind of rally back up into where we were for this morning's open. So a lot of volatility. Let me put the camera on. You're probably getting a headache, too much shaking. Deal with it. That's life. Craig is a successful trader. All right, good job, Craig. I like those affirmations. It's probably true. I don't know. Are you Craig in TradePro? If that's true, then yeah, you are a successful trader, Craig. I can confirm. 8:09 in the morning, Donald Trump then says if trade pact is not reached by then, by December 15th, the United States may delay the tariffs. All right. The deal's reportedly to be on the doorstep. The only thing holding it back at the moment is tariff removal and then some IP stuff. Here's what I'm going to tell you. Based on the last 20 hours, it's not on the doorstep. They'd like for you to believe that this deal's on the doorstep, but it's not. Otherwise, there'd be so much back and forth and the market wouldn't be freaking out. All right. The market doesn't believe what it's being told, and you could see that by the way it's reacting to every little news drop. The thing you should have learned in the last 20 hours is that you need a news feed. If you're trading without real-time news in today's environment, it's going to be very hard to succeed. And if you are, all your success is going to be wiped out by one news event when you're on the wrong side of. All right. So now, two things you got to learn from this. Number one, have a news event. Number two, trade with a group of people, because we're on this thing like white on rice the whole time. All right, chart of the day for today is turkey prices. This is the last thing we're going to cover. U.S. retail prices for turkey are down a little bit, around 4% from last year, hitting their lowest level since 2010. But it offsets gains in sweet potatoes, which are up 11%. The cost of one meal has risen by 1 cent to $48.91. So now you know how to prepare for the upcoming Thanksgiving holiday in the U.S. Key earnings yesterday, Lowe's is up 4% on a strong outlook, and Target's up 14% after posting a Q3 beat, lifting guidance higher. All right, markets have rebounded. We're pretty much in flat territory for the day in the U.S. In London and in Paris, we're down slightly, but not a whole ton. Asian markets are all down across the board, about 3 to 0.5%, except Hong Kong, which is down 1.6. All right, this morning's news, we had initial jobless claims come out at 227,000, higher than expected. Not a good thing for the economy, but not terrible either. It's still a low number by historical standards. And Philly Fed Business Outlook Index was up to 10.4 versus 7 expected and 12 on the high end. Still in the range, but towards the top of the range. All right, 10 a.m. we have existing home sales and leading indicators. 10:10 Fed's Kashkari speaking. 10:30 natural gas inventories, and 4:30 money supply and Fed balance sheet. Okay, that's what's on the docket today. Will says wash, rinse, repeat. That's the market in a nutshell. Will's a trade pro, and that's a great statement. It's exactly what's happening. Somebody in our room posted a little snippet of a cycle that goes through, and it was beautiful. I think it was Andre. It was awesome. All right, Rudy. Enjoy that taco. Rudy says the taco is going to rip today. Wow. Rudy, are you buying that many tacos? You're going to affect the price of the market? I don't know what taco is. Looks like a taco index because there's a dollar sign in front of it. All right, guys, take care. I love you all. Have a great day. Enjoy your session. We got to open up the trading room here, and we're going to make the most of it. Huge opportunity in oil today, and equity markets are going to move. They're not going to be slow after all the back and forth yesterday. All right. My sentiment today is I think sell the early morning rallies and start buying the dips around the 04 for a rip higher. Take care. Have a great day. See you tomorrow. Goodbye. Trade pros in the room. Let's get started. I'm going to send it over to our oil desk. Nah, the screen's not shared. There's no